hosted by Damon Walford, the Chief Commercial Officer at Swoop. And the main topic of conversation, or the title today, is Funding the Future of Your Business in 2021. Damon has over 25 years experience of working with businesses, having worked for high street and challenger banks. I am delighted to hand over to Damon now, who will introduce himself a bit further to you. At the end of the session, we will open up the floor for questions. We have some pre-submitted questions as well from members on the webinar. So if there aren't any, I'll go ahead and ask those, but please do feel free at the end to ask questions. Please keep them towards the end of the session. Yeah, we look forward to the next hour, and thank you very much for coming. So Damon, I'll hand over to you.
Thanks, Matt. Thanks for the introduction. I should also point out I'm joined by a colleague of mine called Tom. Tom's going to help me talk a little bit about equity and grants when we get to that stage in the presentation, because I usually run out of steam and my voice will probably go. So it's good to have somebody else on the call. I mean, as already been said, I can't believe it, but I've worked and been funding SMEs since 1995. Worked for HSBC, RBS, Aldermore, and then last year, actually the year before that, I was working for a business called ThinkCats, and we lent 200 million to trading business in 2019. So I kind of spent my whole life lending money to businesses, and also part of the reason I got into banking was that my parents were self-employed, ran their own business for over 30 years in retail. So I kind of had that experience of seeing them try to grow a business, and also saw how hard it was for them to get funding from banks, and sometimes how they were treated by banks. So I guess I've been a bit of I've seen it from both sides. I was lucky enough to be approached by Swoop and joined them a year ago yesterday, actually. I like to think of myself as, I guess, an entrepreneurial banker who managed to escape having worn a pinstripe suit for over 20 years, that kind of thing. So what is Swoop? Well, we're the technology behind the Chamber Finance Finder. But basically a platform, for those of you who haven't used it, that helps businesses share some details around the company, and we match them to funding opportunities, whether it's debt, loans, grants, equity. We're pretty simple to use. Everything is secure. But I think the key thing, and the reason why I joined Swoop, is that we combine that brilliant technology with, I can't believe I'm saying this, but grey-haired experience. So you get the best of both worlds. You get a nice digital journey, but with people like myself who've been around the block a few times and can hold your hand and try to make that whole funding experience easier. And I guess, why is that important? Well, I think getting access to finance has always been a challenge for businesses. It certainly got harder in 2008 with the financial crisis. And a lot of businesses really don't have the time to spend looking for funding, or worried about getting rejected. And I know that we're all a resilient bunch in the UK, and we like to think of ourselves as being tough, but there's no doubt about it, COVID has had a massive impact on us all. And left, I guess, many of us feeling pessimistic around the short-term future. But the key thing, I think, is, we've got over 44,000 registered users now, and a lot of the customers we talk to do feel optimistic about the future. But if you look at some of the recent research, McKinsey has published something, I think, in November, which showed that 10% of business owners didn't expect their businesses to last the first 6 months of 2021, which is a bit depressing. 20% are worried about paying people on time, 20% worried about, retaining key members of staff. But about a third, thinking about doing things differently or looking at initiatives that will make a difference. And Elite Business published some research recently as well. We did a survey and found that 2/3 of the respondents, successfully tried to pivot their businesses to get through the COVID crisis, looking at things like the services they provide, the products they make, looking at their supply chain to make it work better, or looking at how they target new customer bases. We all know that many businesses have had to change working practices, home working, maybe stretching staff to take on new responsibilities, or work extra hours, or even reducing hours. And all those things have an impact in terms of the business's ability to fund itself. And I think when you put the overlay of funding of Brexit over that, then it's an extra dimension that really makes funding probably more vital than it's ever been. I did think Brexit was probably going to be worse than it has been, or seems to be, and it's probably still early days. And I know we talked earlier before everyone joined around, some of the form filling and some of the supply chain issues we've had with goods getting delayed and things like that. And I know that a lot of our customers at Swoop have been concerned about getting paid on time by the European customers. but also some of them are actually thinking about exporting beyond the EU as well. And so I think securing the right funding is probably more important than it's ever been, but also making sure that when you do take out funding that it's appropriate, because as with all these things, you know, it has to be repaid at some point. And one of the slides I'll show you in a minute, we'll talk a little bit around sort of the funding landscape, because it's complex. And people that have worked in this area for a long time, we find it complex and confusing. So if you're looking at it from the outside, you know, it is, you know, you probably do need some help. And I think one of the key things that I like to talk about is planning around those things and making sure that you are successful, because, you know, nobody likes being rejected. And also the consequences of not being successful now may be more significant than they've ever been. Eleanor, can you move on to the next slide, please? I guess we probably covered that off a little bit to a certain extent, but do you want to go on to the next one and I'll talk about the funding marketplace. So this slide basically in a nutshell shows you the type of funding that is accessible when you use the Chamber Finance Funder. I think I'll start at the bottom and talk about COVID, because obviously it's the most topical thing at the moment. And I think up until probably October, it was probably 95% of the things that we did were COVID related. But it has started to change, and I would say it's roughly 50-50 now. So businesses coming to us now, 50% of them are looking for help with COVID issues or COVID funding, and 50% looking for other things, which I think is a big shift, and we've already seen that in recent months. I think it's fair to say that when the COVID funding initiative started, we had to learn fast, and one of the things I was talking about earlier with Matt was that myself, our chief exec and our chief operating officer, we launched a hotline. I think it was probably about the 23rd of March, something like that. And we manned that hotline ourselves over the weekend so that we could really understand, firstly, what our customers were experiencing, how they were feeling, but also we could then share that feedback with some of the funders that were on our marketplace. So just, you know, and actually you as Chamber Finance, Chamber members have access to a hotline as well. And so we're always at the end of the phone if you want to speak to us. So I guess a lot of you will have heard of the CBILS coronavirus business interruption loan scheme and how that scheme's been rolled out. It's been a massive area for us, and I think it's probably the scheme that had the right intentions, but initially was probably implemented pretty poorly and distributed quite poorly. And even now, you know, 20 billion has been lent to around 82,000 companies, but there's been 185,000 applicants. There's still over 100,000 customers there, or businesses that have not been successful. And so a lot of that was down to the interpretation of the rules, you know, and providing evidence around, you know, not being a business in difficulty under 29 and all those kind of things. But I think one of the things that I would say around this sort of the CBILS scheme is that it's still open until the end of March, and there is time to apply if you haven't already applied. There's also time to apply for top-ups as well if that's what you need. But it's really, really important to approach the right funder. There's over 90 funders in that scheme now. Some of them only really kind of launched in the back end of 2020. And we've got strong relationships with the majority of them, from the high street banks to some of the alternative funders. And we have a team that constantly monitor that marketplace and make sure that we understand exactly what the funders need to make decisions in good time, because I think a lot of what happened initially was that people were putting applications in and not finding out a result for months and months and months, and that uncertainty can be really damning, particularly when the clock's ticking on a scheme. So one of the things that we do, we understand what companies, what the funders need, and we really try and help curate that information in the right way to tell a story around the business. We help, you know, businesses need to produce robust forecasts to show the impact of COVID and what they've done to adapt. They also need to show the impact of some of the government support, you know, the grants and all furlough and all those things in those forecasts, because they need to be able to show that at some point they can repay the debt. You know, these schemes have a 12-month hiatus on payments, but they do need to be repaid. And I think, you know, the successful companies that we've helped have been willing to share that data with us, that they're happy to integrate their bank accounts with us and their accounting packages with us, because it just helps us tell that story. And more funders now are looking at the present and looking forward, as opposed to looking at historic accounts, because the historic accounts, the danger with them is particularly when they're filed showing the impact of COVID, they're probably not going to tell a particularly rosy story. So actually seeing the current trading and seeing, you know, how much cash is in the bank, seeing is the business profitable on a month-by-month basis, all those kind of things that are really, really important. And I guess the other thing is, this whole idea of doing all that work and getting rejected at the end of it. What we try and do is be really open and honest about the chances of success, and because of our customer base and the number of people we've helped, we have a pretty good feel of what's going to work and what isn't. And the data that you share with us through the Finance Finder helps us match you to the right funder. So we're trying to de-risk that to a certain extent. And we've seen some deals funded in less than a week, which has been really, really great. The majority of them take, probably between 2 and 4 weeks, if we're honest, because they people don't tend to make these decisions quickly. But it's our job is really to help you plan to be successful in terms of if you need a CBILS loan. The other scheme that's been really popular is obviously the Bounce Back Loan scheme, and that's for loans between £2,000 and £50,000, 100% government guarantee, no interest for you on all that kind of stuff. And I guess most of the people on this call understand around those Bounce Back Loan scheme. It's been pretty successful. 44 billion lent, over 1.4 million successful customers. That's a 75% approval rate, and those of you that read the papers and stuff will know that there's some concern around that high level of approval rate and maybe some problems in the future. And our role there really is to help you, signpost you to your bank to get a bounce back loan if you haven't already got one, but also to make sure that if you're not successful, there are other alternatives we can consider. Or maybe a bounce back loan isn't enough now. Maybe 50,000 isn't enough cash. Maybe you may need more. Or we can look at alternatives around those kind of things. So I think that the sort of the COVID schemes, the bounce back loan, the coronavirus business interruption loan schemes were really, really popular and fairly successful in 2020, and they continue to be so now. We do get people coming to us still for those kind of things. To be honest, the other schemes that are COVID related, the Future Fund and the coronavirus large business interruption loan scheme, which is not very easy to say, we've had limited exposure to them because of the kind of clients we deal with. I guess that's probably enough around COVID. I think they have impacted a lot of businesses, but there have, as I said earlier, been a lot of businesses that haven't been successful, and also what happens beyond those schemes ending. And I think, whilst I said there was about 90 accredited CBILS lenders in the UK, there are hundreds of funders in the UK that haven't been accredited because they haven't wanted to or haven't been able to. But what they are doing now is innovating and looking at ways that they can help those businesses that haven't been able to secure COVID support. And a lot of these businesses have had to do that to survive. If you think about it, if 1.4 million businesses got bounce back loans and you've been a lender to those businesses over the last 5 or 10 years, a lot of that demand will have gone away. So what they tend to look at is the whole of the risk spectrum. So they will look at companies that historically haven't been able to get funding. They'll take more of a commercial approach. As I said earlier, they'll use real-time data as opposed to historic accounts like bank accounts and things like that to make sure that they see the current trading position. And they tend to use algorithms to kind of make some kind of decisions, but also they're more willing now to listen to the story behind the business. So who are the people? What is the product? What is the service? What's the unique service proposition? How long has the business been going? What does the future look like? What's the customer base like? How secure is that customer base? What's their supply chain? All those kind of things. And I think for me, that's probably where we're seeing a lot more demand now with companies that probably haven't been able to secure CBILS or bounce back loans. They can't get hold of their bank manager. They come to us to look at the alternative finance market for them. And we have some niche products in there. For example, we have a couple of funders that will provide loans against unpaid R&D claims. We have businesses that will do funding against future revenue models. So you can, if you're an e-commerce business, you can predict what your revenue is going to be, and they will advance money against those things. We cover a multitude of funding options, things like unsecured loans, which tend to be up to levels of sort of 250,000. We have a nice bunch of funders that do asset finance, which is really useful if you're looking to adapt your business to trade safely more permanently. One of my favorite stories last year was I went on holiday to Torquay for a week, and I went to a restaurant, and it was when it was Eat Out to Help Out scheme going. And so I walked into the restaurant, and they actually had market trading rails covered in cling film between each table, so that you were kind of like protected from the people eating next to you. And I actually remember sitting there with my wife thinking to myself, I'd rather that wasn't there, because cling film is probably one of the hardest things to clean, and I don't know how long it's been there for. Then the next night we went to a business that as you walked, you had to queue up to get in, obviously 2 meters apart. And as you walk through, they had a camera, had one of those thermometers that was attached to the door, and it actually was taking your temperature before you kind of got too close. And I actually felt quite comfortable about that. So, they were taking a temperature as you walked in, and then as you walked in, they'd invested in these beautiful kind of partitions and pods. And so you could actually sit with your family, totally safe, totally secure. And there's no doubt that people were queuing around the block to get there. And so I think asset finance, looking at how you can, make your business more safe in the future is going to be quite important. But also we've seen a lot of businesses where people have either been furloughed or made redundant and have, set up as delivery services, man with a van, lady with a van. And we have a lot of funders there that will look at that kind of funding. We see companies coming to us now that are growing really, really, really well and are looking to get funding against outstanding invoices on invoice finance. And an increased interest in invoice finance because of late payment. So I said earlier, roughly 10% of businesses think they're not going to survive beyond the end of June this year. Well, I bet they're not telling you that when they're ordering from you. And so invoice finance can help protect against bad delayed payment. You can secure your cash flow. You can also protect against bad debts. And I think that's quite important. And also, trading internationally post-Brexit, where companies are looking to secure orders with companies outside of the EU, invoice finance can help in terms of assessing the validity of that customer. You can offer them credit terms, which is often the way that you would secure the deal, and know that you're going to get paid, which is pretty important. We also see, an increase in advances, increased interest in things like merchant cash advances. It's not a loan really, but it's basically where a funder will advance cash against the future revenue through card terminals. So it's good for things like online retailers and takeaway delivery, that kind of stuff. And the other thing that we've done recently is we've launched a specialist commercial finance team because looking at commercial mortgages, because we've seen more companies come to us and saying, actually, I'd like to restructure my borrowing over a longer period, maybe go from 5 years to 10 to 15 to 20, and commercial mortgages would allow you to do that. So you spread the cost over a more defined period, a longer period, which helps with the repayments. But also looking at commercial property where it may be stood empty for 6 months or at half capacity or 25% capacity. So looking to repurpose that property as either residential or a different use. And so we have a funding panel that will help with those kind of things. I guess that probably covers off the course of the COVID funding options and the loan side. I'm going to hand you over to my colleague Tom now, if that's okay. He's going to talk a little bit about grants and equity. You're probably sick of my voice. Is that okay, Tom?
Perfect. Thanks very much, Damon. Can you hear me all right now? Yeah, lovely. Hi, everyone. My name's Tom, and I work on the equity and grants team here at Swift. A bit of an overview of what that landscape's looking like and it looked last year with the impact of COVID. So I'll start on grants. At Sweep, we can help businesses access different types of grant support, and the two main categories being capital grants, sometimes known as local grants, and then also innovation grants. The grant landscape in the UK is forever changing, and the Finance Finder can help match and guide you to the most appropriate grant options available to your business. I'll start off with capital grants. These can usually be used to hire staff, pay subcontractors, or buy equipment. Although most of the funding towards COVID relief grants, especially last year, these are usually distributed by local authorities and growth hubs. Local authority COVID support has actually been the main grant funding available to SMEs during COVID. The local authority grants were mainly small business rate relief grants, mainly within the hospitality, retail and leisure sectors that were running last year, as naturally these are the sectors that were most negatively impacted by COVID. Depending on the rateable value of the business, local authorities have distributed grants ranging from 10k to 25k and relieving businesses of paying business rates for 12 months. Local authorities should have approached these firms paying between 15 to 50k in small business rates, who are entitled to the small business rate grant fund of 10k. Hospitality, leisure and retail businesses were able to get 25k grants. As well as these grants, more recently, businesses may be eligible for a further 9k grant if they've been required to close due to the local most recent national restrictions implemented the 5th of January last year. So it's definitely worthwhile contacting your local council or local growth to see if you're eligible for this. Unfortunately, there are a lot of businesses who did not benefit from these local grants, mainly because they might not have fallen into the right sector or they didn't have the right rateable value. For example, those working in managed office spaces or market traders, for example. But as we're all hoping, COVID is hopefully coming to an end very soon. Hopefully there'll be more grants available to small businesses distributed by local growth hubs throughout this year. As I mentioned, we can help navigate this landscape. It can be quite complex with lots of different funders offering different grants. So by using the Finance Finder, we can match you to the most suited grants. Next, I'll talk about the innovation grants, which are run by the likes of Innovate UK. Businesses who are running really innovative projects, research and development projects, they might be eligible in applying for Innovate UK grants, such as the Innovate UK Smart Grants. This mainly applies to businesses in sectors such as AI, clean tech, health and life sciences, and also manufacturing. That being said, if the business is doing something truly state of the art and designing something life-changing, it can be sector agnostic. A good example is the upcoming deadline for the UK Smart Grant, which is widely sector agnostic. This is an opportunity for UK registered organisations to apply for a share of up to £25 million of government funding to deliver disruptive R&D projects that can significantly impact the economy in a positive way. This particular grant also has a rolling close, so if you've seen the deadline upcoming for the 20th of January, don't be scared. There's going to be another one opening straight away, so we can help. Assess your eligibility for these grants, and we also have a panel of grant writers who can help write applications for these competitive grants. There's also been a few specific grant funds running, especially last year, for businesses that have had a positive impact on COVID. This fund is closed, but we're hoping there'll be another round opening next year. An example of a business who won grant funding from this scheme last year, who I'm actually in contact with, as they're looking for equity investment at the moment. They have designed a platform for the easy management of work from home for businesses. Very much related to these types of research and development grants is the R&D tax credit scheme, which is a great way of injecting some funding back into your business. This scheme allows SMEs to reclaim up to a third of their R&D costs. So in practice, SMEs, both profitable and loss-making, can get back up to a third of the amount that they've spent on R&D. Businesses can claim on employee costs, subcontractor costs, software and consumable items, as well as much more. Like I said, it's a great way to inject funds back into your business and reclaim some of the money that you've spent on developing new products and processes. We also expect to see a lot more of these types of claims in the next year or so, as businesses are looking to pivot into different sectors, moving online, having to spend a lot on research and development. We can help maximise these claims, and we'd be happy to chat to you to explore this option. Further to that, you can also get an advance on this R&D claim, so an R&D tax credit loan. So you can get an advance of the loan amount. As the application goes through HMRC, the lead times have been quite lengthy this last year in 2020 due to COVID. So you can actually apply for a loan to unlock that funding quicker. So that's a bit about grants. I'll move on to equity now as well, which we can also help with the Finance Finder. Obviously, there's no surprise that last year this market shrunk significantly due to COVID. We found a lot of the funds in our network actually reduced their appetite completely and look after their businesses within their portfolios. Our own research shows that roughly 1 in 5 of our investors on our platform decided they weren't going to be looking at new deals, particularly in sort of May, April last year, and especially in sectors such as B2C, so consumer type businesses. Investors were really concentrating on looking after their portfolios rather than looking at new deal flow. Also, according to research by Bowhurst, the amount of UK startups looking to raise capital for the first time in between March and May last year fell by 83%. So this shows the impact of COVID on raising equity finance at the start of last year. That being said, that was about quite a while ago now. So we're seeing a big increase in appetite from investors, particularly VCs who are looking for good opportunities to invest in. We feel that there's quite a lot of dry powder. Investments weren't made early last year, and there's quite a lot of investors looking to deploy capital before the end of this tax year. So we think it's a very good time to be raising. We're able to get startups in front of the right investors using our network of VCs, angels and angel syndicates, and also some family offices. We also work quite closely with crowdfunding platforms as well. So we match startups to their most suitable investors depending on what size of raise they're doing, what sector they're in, the stage of the business, whether they have EIS and SEIS assurance, and we can get people in front of the right investor. We're also happy to help people develop their pitch decks and give feedback, as we know what our investors are looking for on that front. Over the last year, we've seen a lot of increase in businesses moving into sort of the healthcare sector, which is quite exciting. People look to combat COVID. And also, as you'd imagine, we've seen a huge growth in e-commerce platforms and people pivoting towards this sector as everyone's moving online. A lot of founders are looking to take advantage to pivot and get their products to market. We've seen some great innovation from our startups changing their business to survive and thrive during COVID. So we can definitely assist if you're looking to raise using the Finance Finder. I'm going to pass you back to Damon now. Hopefully that wasn't too boring, my little overview there of equity and grants.
Thanks, Tom. On the face of it, grants and equity can be quite daunting, I guess, when you look at it. But one of the benefits of using the Finance Finder is that we help you match to a certain extent, but also you get access to a team of experts that will hold your hand. And I think it's an interesting thing with grants and equity, where we talk a lot about loans and we talk a lot about debt, but actually we find that the levels of inquiries for equity and grants have gone up significantly in the last quarter. And we have teams that are dedicated to each of those products as well, which Tom works in the equity and grants team. We also have a team that looks at loans and debt and COVID, separate teams, but all kind of working as one virtually. I was going to say we all work in the same office, but that's obviously not true at the moment, but hopefully we will be very, very, very soon. We've talked a lot about, I guess, raising finance. One of the things that I think, should cover off just briefly is that, not every business wants to borrow money, and a lot of our customers who've registered with us in the last 12 months have looked at areas where they can reduce their expenditure on everyday items to make sure that either they don't need to borrow money, or if they have taken out loan, that they can repay them and build that benefit into the future forecast for the firm, and make that, the bankers use this word serviceability, debt serviceability, but it's just the ability of a business to repay a loan and how much headroom there is in their forecasting to do that. And we tend to overlook those everyday expenditure items quite a lot. So the chamber members have access to a free health check that we offer, where we can look at not only funding but things like energy suppliers, bank charges, all those kind of things, just to make sure that you have looked at those everyday items, and and the pounds do add up, and some of the new banks that are out there offer fantastic value on current accounts. You don't have to switch either. You can just open a second account and use those accounts for some of the more expensive payments that you make. I think I read somewhere that you're more likely to get 3 times more likely to get divorced than switch a bank account, and actually people don't have to switch. You can just open a new account, and many businesses have more than one business account. It's usual now, and some of the people that that we work with offer really good value and added benefits alongside those accounts. I'm just conscious been talking about half an hour, which is quite a long time. So I guess a couple of things are just sort of key things I'd just like to cover off. I think whilst it's easy for us all to get pessimistic, what we've seen at Swoop is many businesses looking at how they can reignite their business, trade safely, not only survive, but then thrive beyond COVID. We see a lot of those stories coming through, and it's really good to see. Brexit probably does make it more complex, but it also gives rise to new opportunities that can be exploited, but also opens us up to new risks as well. So, if you do have a supply chain that's heavily linked to Europe, there may be delays in supply, you may need more working capital, you may want to secure early orders, those kind of things, which may mean you need funding. A lot of the businesses that we talk to are looking at productivity, they're looking at digitizing their business, they're looking at how they can be more efficient with people working from home. and some are taking advantage of the situation and raising finance to buy competitors that are struggling and grow their business that way. Or as I said earlier, looking at, if they're in commercial property, at how they can make the most of that commercial property, repurposing it, etc. It is also true to say that a lot of businesses are worried about the future and just looking to generate cash to see them through the other side. And I think, you know, I talked earlier quite a lot, I guess, around the bounce back loans and the CBILS options, and they are pretty good options for you, you know, very favourable terms, and you get the benefit of government support in terms of guarantees and stuff like that. But you have to make sure it's the right option for you, and also the clock is ticking. You know, these schemes don't allow you to access the funding that quickly. You know, I said earlier we've done deals in a week, but the reality is it can take 2 to 4, if not slightly longer in certain cases. And it's all about making sure that you're successful. So what we do is we understand that marketplace, we understand who's got the appetite, we understand the kind of deals that they want to do, and it can be a full-time job doing that, and that's what we exist, I guess, to a certain extent. And also making sure that you work with the right partners is also important. So we see businesses come to us that you know, are members of the Chamber of Commerce, have really good accountants, have professional advisors. It really helps them be successful. And it's not only around that using our technology and using the technology that we have, but it's also making sure that you are able to present your business in the right light, in the right way to be successful. Being open to sharing more data is really important, you know, and also looking at cash, looking at making sure you understand what your cash position is now and in the future. And other options, you know, if you have spent money on innovation, why not look at the R&D claim? Look at cash reserves. We've got unprecedented levels of debt now in the SME population of the UK, and it's going to be, you know, interesting to see how that all pays out, particularly in this kind of climate of uncertainty. But the thing that I would probably sort of just add is that you're not alone, right? A lot of businesses feel this way. We spend time, you know, predominantly all our day job is speaking to businesses and helping and supporting them. And so I, as an ex-funder, as an ex-banker, I would say that the one thing that the piece of advice that I would probably give is, if you have borrowed money or you're uncertain about your future, then it's a pretty good idea to be open and honest and transparent with your funder around that, because they're in unprecedented times too, and they're highly likely to want to support you. So sharing management information, speaking to them more regularly, don't be the ostrich and put your head in the sand would be my thing. And if you are, you know, struggling and you want to talk about options, whilst we're not able to give advice, we have got experience of the funding marketplace. We do know how those matches work really well, and we're more than happy to spend time talking to you. We went through a period where we were, you know, getting sort of 150, 200 registrations a day, which is quite challenging. We've kind of normalized somewhere between 100 and 150, and we've recruited and recruited well to meet that demand. So we like to speak to everybody. We like to combine our technology. We like to use data, but we're at the end of the phone, and we're more than happy to help. And the team is made up of people like myself and Tom. You know, we're not here to sell to you. We're here to help. Yes, we want to build a successful business, but ultimately we'll do that off the back of our reputation and how we make you feel when you interact with us. Hopefully that's given you some insight. Does anybody want to ask any questions, or?
I've got a couple of questions, Damon, that have pre-submitted to me. So I'll start off with this one. At the end of last year, the Chancellor announced that the government-backed schemes were to be extended to April 2021 now. In your opinion, and yours, Tom, as well, what does that mean for business owners? And what are the honest sort of pros and cons of the government schemes? And based on your knowledge of sort of the financial markets, you know, where do you see this going, and what sort of problems do you see that we're as business owners going to encounter?
It's a really good question. I think there's a couple of things on it. I think the extension obviously gives businesses who may not have thought around needing support time to think about those things. And I know every business is different, but I would say, you know, these schemes that the government have put in place are there for a specific purpose, and it's to allow business to sort of thrive and survive COVID, but also to look at how they can, I guess, secure their businesses for the future and manage that impact of COVID. It will impact on businesses many different ways, but if you see competitors struggling, and you've seen your turnover reduce because of COVID, and you think, actually, if I went out and bought a business that would help me recover that turnover, then it may be that you can use a CBILS for that purpose. If you are worried about the future revenue of your business, or you're losing sleep over it, then as long as you can demonstrate the impact and you're using the money in the business for the right purpose, then I would say it's something that businesses should consider. And with all these schemes, the extensions are there for a reason. It's because they perceive more demand to be coming. And we have seen numerous businesses come back to us, to take out increased CBILS facilities, because they're actually doing okay and growing, but they recognize that they want to make the most of the opportunity of that favorable debt. I think there was a previous condition around not being an undertaking in difficulty at the end of 2019, which meant that earlier on in the schemes, people were put off. They didn't really understand that. Early stage companies that couldn't demonstrate they were profitable, it was quite hard for them to raise funding. The government changed those rules, and small companies that were in financial difficulty at the end of 2019, as long as they had less than 50 employees and under 9 million turnover, they then became eligible for CBILS. So I guess the other thing is, businesses that may have filed accounts in 2019 are now looking to, or 2020 are now looking to file more recent sets of accounts, which may mean they are now eligible for and want to apply. I think time is a good thing. I mean, the initial lockdown, the advice we gave to people was not to panic, was to spend time thinking about, were these schemes the right thing for them to do? I would always say that taking on debt, obviously comes with consequences and obligations to repay that debt. And as long as the money can be used for a positive purpose, then I think it's a good thing they've been extended. And I suspect I don't know, but I suspect there will be some other schemes that come out once these schemes end at the end of March that will support businesses further, because the opportunity is there. And the research that I referred to earlier shows that businesses have managed to pivot pretty well. They have managed to change their business models, and that can only be good for the future, right? There are a lot of zombie businesses in the UK that are just kind of struggling month on month, year on year. If this helps businesses innovate, become more productive, upskill their staff, create new business models, then brilliant. At the end of the day, I think that's just what the UK needs.
Fantastic, thank you. Gary, did I see you've got a question for the panel? Gary Wilson.
I did, if possible. If possible, yeah. And it's really good. It's really positive stuff. This. I was just the question was around we're sort of like a micro business, effectively. Turnover, luckily for us, has carried on at the same level as it was last year, or about 350k turnover. We did take advantage of the bounce back loan last year, sort of at the beginning of the pandemic. But what I've found now is it seems very difficult because we don't have premises, because we're a mobile project management consultancy. So grants are not, unless I'm missing something, grants are not available to us at all in our industry. And where we're struggling is we have won projects, but then we effectively have to fund those projects with existing cash flow, which is very tough. So I didn't know if there's any facilities out there that look at, we get a purchase order from a client, but then we have to deliver the project and bill at the end of the project. So I didn't know. I'm struggling to find. CBILS seems to be a bit of an issue for us for some reason, but I didn't know if there's any other sort of funding options out there.
There may be. I think, you maybe not for a call like this, but the CBILS thing, you can borrow, I think, up to 20% of your turnover, which may give you a bit extra. But there are some funders that they will look at purchase order finance and maybe invoice finance. So some firms will look at project services as being applicable for those kind of things. It's difficult, Gary, without understanding the business in a bit more detail, But certainly happy to have a chat with you and look at options for you. But you're right, yeah, they're kind of like the lack of premises, the mobility stuff is hard for grants. What kind of project work does the business do?
No, that I appreciate that. I mean, would the Chamber Finance Finder, is that the right place for that type of inquiry to be put through, or is it more towards the sort of CBILS normal standard type of funding?
No. We can all go through the Chamber Finance Finder if you register there, and then you have the ability to select the kind of funding you're looking for. But also, you know, more than happy if you just want to contact us outside of this webinar, and either Tom or myself will put a call into you.
Yeah, we can also see what other grant options might be available to you.
Brilliant, thanks.
I'm sure that's something we can organise, Matt, if we can.
Yeah, absolutely. Anybody listening as well, if you do have any sort of company specific or sector specific questions, let myself or Kate know, and then we can sort of introduce you to Damon and Tom, just sort of away from the seminar, because I do appreciate a lot of companies' queries are different, and it might not be relevant for everyone. So we're more than happy to sort that post session. But if anybody else has any questions, that'd be fantastic. If not, not to worry.
Quick question, if I may.
Yeah, of course, Jonathan. Yeah.
Brilliant, thank you. First of all, Damon and Tom, thanks for that really interesting overview. Actually, really compartmentalizes how Swoop can benefit businesses and essentially sort of demystify finance, which is quite tricky to understand at the best of times. Damon, I liked your expression of Swoop combined tech with grey-haired experience. I certainly think with COVID and 2 kids under 5, I've delved more into the grey-haired experience zone within the last year or so. My question was, I've noticed that on the website there was a multitude of choice regarding equity, loans, asset finance. But really, I just wanted to ask, were there any plans to sort of broaden the depth of choice for consumers regarding grants and R&D tax credits at this stage? It was just a speculative question.
Yeah, I mean, let's take a step back and go back sort of to March 2020, if we can. We had a marketplace which had a host, more funders than we could probably ever service, and many R&D tax suppliers on there and grants and everything like that. And what happened in March 2015 was that a lot of those people kind of not disappeared, but you know, we had to go through a whole new onboarding journey in terms of re-onboarding funders, looking at our partnerships with different people, and making sure that we had the right suppliers for now, I think is the polite way of putting it. And I believe we have done that. We recruited some people to help do that who were experienced and were able to work with our partners to make sure that we can give you access to the right partners that, you know, that everyone uses this word trusted, but you know, it's important, right? Trust is more important than ever. And so we do a lot of due diligence with the people that we work with now. And so we're constantly looking at that marketplace. And I think on the R&D side and on the grant side, I think it is an iterative process. And, you know, Tom can speak for himself, but, you know, up until probably 6 months ago, it was, you know, oh my God, this is getting more and more complex. And it seems to have simplified itself actually over the last 6 months. Mm-hmm. And I know that, you know, Tom, I think you joined in January, you know, I think January, February. So we're learning as we go. And yeah, we will constantly be looking at that marketplace, particularly around funding, grants and equity, to make sure that we have the right, let's use the word suppliers on there, the right liquidity, but also that they're the kind of people that we understand the kind of business they want to work with as well. Because, you know, one of the key things for us is our reputation. And as I said to you, you know, we went to this period where we were onboarding 200 new customers a day, and we got 44,000 over, actually maybe 45,000, actually might be more than that now, registered users. And so we want to keep growing and growing as a business ourselves. When I joined, I think I was employee number 22. I think we're now up at 70, 75. And so we've grown phenomenally. We already had plans to grow when COVID happened, but it is all around not only just growing our customer base, but making sure we have the right products on our marketplace as well. So that when you go to the Chamber Finance Finder, you have access to all those things. And we're constantly innovating in terms of our use of data, but making sure that our customer journeys get simpler and simpler as well. Because, you know, we all love to ask questions of each other, but actually it's the relevance of those questions in terms of the support you need that's quite important, and technology helps with that. I don't know if that answered your question, but
yeah, absolutely. Thank you.
Thank God for that. Brilliant.
And Damien, how do you get paid for your services? Is it, do the lenders pay you? Do we pay you to find a solution for us? Like, how does it work?
Yeah, that's a really, really good question. There's probably two elements to it. 99% of what we do, there is no fee. We would get paid a fee from the funders when the funding is complete. There are a couple of exceptions to that. Sometimes, you know, on equity, there is a success fee. So if we were to raise equity funding, then there's a success fee that's payable when that equity deal closes. And on some of the grant applications, people that we work with, they will charge an upfront fee as well, because they can demonstrate their ability to improve the chances of success and the value add they bring to the party. But, you know, we're all about, trying to be as free as we can. And so, yeah, 95 to 99% of what we do, there's no fee involved.
Thank you.
Well, if there are no other questions, we also, just as a footnote, we'll be sharing this webinar on our new NN and MK Chamber of Commerce YouTube channel, along with all the other webinars that we're doing. So if you'd like to reshare some of it or pass it on to other members of staff or colleagues, we'd be delighted for you to do that. It will take a couple of days to go live, but we do try and get them up as quick as we can. Like I said, also post session, do let myself or Kate know if any of you have any specific questions, and we can forward them on and create a little bit of an introduction to you and the guys at Swoop as well. But no, so Damon, thank you. Tom, thank you very much for your time this afternoon. I think that's all the questions from us. And yeah, thank you. It was really, really insightful and interesting.
Thank you for the opportunity. It's always good, right, to talk to people, but also I think the questions have been great. So thank you for that. I appreciate it. And for the feedback, it's really nice to see. So as Matt says, if you have any questions or you want to speak to us direct or stuff like that, please share introduction details.
Thanks for your time, guys. Appreciate it.
Thanks very much for having us.
Thank you very much.
Thank you. Bye-bye.
Thanks.
Bye-bye.